Hey guys, this is Nick from Financially Aware, and in this video I want to talk about the Netflix earnings and why they're down about 10% in the after hours. They're down about $47. They were down about 10% earlier. We're going to look at the earnings and also talk about one thing that not a lot of people mention about Netflix, and that it could potentially make them a lot more money eventually. So let's get right into the earnings. So for their second quarter, their revenue was up 25% to $6.15 billion. They were expected to only have $6.08 billion in revenue, so they beat on the revenue, but they were expected to have $1.81 a share in net income, but they only had $1.59 a share. So that's part of the reason why the stock is trading down probably, but there is another reason also. So their subscribers increased to 10 million in this quarter, up from an expected 7.5 million. Okay, so that's really good. However, it's the forecast for the third quarter that really spooked a lot of people. So here you see, here's the second quarter, 10 million ads. Problem is, their forecast for the third quarter is only 2.5 million new subscribers. And it was forecasted that they would have 5 million subscribers for the third quarter. So what's going on here? Why are they forecasting 2.5 million, 50% of what most analysts thought they were going to have? It's pretty simple, really. Here are the weekly subscriber additions, and if you see that all these charts are pretty smooth, they steadily gain during the year. And so 2018 and 19, they're about 28 million or so. So that's about 2.3 million subscribers a month. So steadily you should see that number here. But because of the shutdown, it spiked. So the 3 months, instead of being about 7 million or 7.5, they're expecting it spiked to 10, because some of these people that would have bought later on, because they were stuck home, it pulled demand forward, and so they front loaded the subscriptions here. And so because of that, those people won't be subscribing in the third quarter. So that's why the third quarter is projected to be only 2.5 million. But if you put the two together, 7.5 for the second quarter and 5 for the third quarter, that's 12.5 million. And you still getting 12.5 million. You're just getting 10 million in the second quarter and 2.5 million in the third quarter. So it's the same exact thing, really. And just to take a look to see if Netflix, if their growth is slowing or not, let's take a look at some of their subscriber numbers here. This is US, Canada, Europe, Middle East, Africa, Latin America, Asia Pacific. And so you see that their paid memberships year over year, this is second quarter 2019 to second quarter 2020, they grew at about 10.6%. And Europe, Middle East, and Africa grew at 40%. Latin America grew at 28%, and Asia Pacific grew a lot at 73%. So from 12.9 million subscribers to 22.49 million, that's a big jump. But another thing to notice here is the average revenue per user, meaning how much their subscription is. And you see here in the US and Canada, it's like $13. Europe, Middle East, Africa is like $10.50. Latin America is only like $8, $7.50, something like that, as well as Asia Pacific is like $9. So these areas that are growing faster, they can't charge as much just because people don't have maybe the same amount of disposable income. So they charge based on what they think they can get out of people based on their disposable income and things like that. So that's why these numbers are smaller here compared to US and Canada. So is their growth slowing? Eventually it will. You see here that paid memberships are like 73 million in the US and Canada. Well, in the US and Canada, there is about 140 million households. So if you were to assume that each household has one account, then maybe they're halfway there. But it's probably less than that because, maybe a lot older people, maybe they don't subscribe to Netflix or something like that. So I wouldn't say that they're 50% there. Maybe they're 65, 70% of the way there, where everybody in the US who's going to have a Netflix account, has one. So they probably still have a little ways to go here in the US and Canada, but in these other countries, they still have probably a lot of room to grow. Now, I'm not a fan of Netflix for two reasons. One is I don't have a subscription, but I have a family member subscription, and I might try to watch it once a week on Friday or Saturday night. And it takes me longer to actually find something to watch than the amount of time I spend watching it. And even then, I may spend an hour trying to find a movie to watch and then find out that it's in another language and only has English subtitles or something. And the number two reason is its PE ratio is 106. So, the S&P historically is, say, 16 or 20. Now it's higher, say 25 or so. But, you're paying for every $100 invested in Netflix, you're getting like $1 in earnings versus getting $5 or $6 in something like the S&P. So to me, it's way overly valued, and their PE is 106, but their growth rate is like in the 20s. So it makes no sense. However, you can't argue with the stock chart. Okay, this thing is a rocket ship. And, it's one of the fangs. And so people love to trade it and bid it up because of the story, not because of the numbers. Everybody's going to streaming. Everybody's cutting the cables and all this stuff, cord cutting and all that. So it's a great story. And so that's why a lot of people love to buy Netflix. So is the stock going to keep going up? I don't know. But any indication on how it's been trading, I wouldn't doubt it, and I wouldn't be surprised if it recovers all of its 10% loss in the next few days. I mean, nothing surprises me anymore in this market anyway. But one thing I will say about Netflix is the potential trick up their sleeve, and what I mean by that is advertising. Now, some other services like Hulu and YouTube and other services have kind of like a paid or a ad paid model, a premium model where you just pay, or you can get a free model by watching ads or something like that. And Netflix has said that, they've resisted ads and all this stuff, but I don't know if you know the history of cable TV, but looking at this New York Times article from July 26, 1981. Will cable TV be invaded by commercials? Okay, so when cable TV first came out, that's how they advertised it, that, hey, look at us, no commercials. We're not like the network TV that you got over your antenna, like NBC, CBS, ABC, where they showed commercials on their programming. Cable TV sold itself as not having any commercials. And so what they did was they waited till they got, a critical mass of customers, got huge market share, and then they started with the commercials. And now there's so many commercials on them that 1 hour of cable TV has 15 minutes and 38 seconds of ads versus network TV, meaning over the air, ABC, NBC, CBS, that kind of thing, has 18 minutes of ads. It's pretty shocking if you think about it. I mean, that's between 1/4 and 1/3 of the time you're watching TV is ads. So for Netflix to say they're never going to show ads, I think they're just trying to get as many people signed up as possible, and then they will start. And if you don't believe me, they kind of already started by dipping their toes. This Reddit article from 3 years ago, somebody complaining about seeing trailers for other shows on Netflix, and they admitted that they tested some advertising for other shows, but they said it's only for their own shows, that kind of thing, that they're not showing products. But that's the boiling frog. They start small and they'll eventually, before you know it, it'll be full-fledged advertising, I think. And so that could really add to their bottom line eventually. And here in this article, 2018, Netflix is testing commercials and subscribers are not happy. So again, they said it's only for other shows and that kind of thing. And now, just like the other New York Times article in 1981, Netflix is ad-free but isn't brand-free. So they have, product placement or something like that. It's a small step in that direction, but I think that's eventually where it's going to go. And so some other articles like this one, Netflix is still saying no to ads, January 22nd, 2020, saying that they can't compete with Amazon, Google, and Facebook and all of that. But some analysts are saying that if they added ads, that could add about $1 billion to their net income per year. So that's a big amount of money. That's about 50% of their yearly net income right now. Right now they make about $2 billion in net income a year. So that's a potential big money maker in the future. So who knows? But Reed Hastings says he's not going to have ads. But here this article says Netflix will have no choice but to run ads, industry executives say. So again, I think they're just waiting until they can get as many people as possible, and then when the growth slows and the competition from all these other places like Disney, NBC, HBO Max and all that stuff, if they're showing ads or they're giving away their service for free with supported by ads or something like that, they're going to have to follow along to some extent. So I think it's inevitable that they will show ads to increase their revenue once their growth rate slows down. So that's my look at Netflix. Let me know in the comments below if you think Netflix is a buy or not, and if you think that Netflix will reverse this 10% drop before, say, next week. I wouldn't doubt it. And please give me a thumbs up if you like this video. It helps me with the YouTube algorithms. And as always, subscribe to my channel if you haven't done so already. Thank you for watching.